Welcome back. Well, recently, millions of Americans got up to $1,400 in stimulus payments from the government. And research firm Cardify, they're launching a weekly stimulus tracker to better gauge where and how people are spending those checks. So we want to bring in Derrick Fung. He's the CEO of Cardify. And Derrick, great to see you. What did you find? How are people spending their stimulus money?
Hey, Sean, I get to see you as well. Just for background, we track millions of consumers and their spending through debit credit cards, and want to roll out this stimulus tracker because we're just very curious how consumers will be spending their money. I'll say that there's parts of it that are surprising and parts of it weren't surprising. The parts that weren't surprising is we all want to travel. There's it's been talked about, ton of pent up demand, travel and leisure, whether it's Airbnbs, whether it's hotels, a ton of consumers wanting to travel and leisure. A lot of consumers just wanting to go out, have fun, party. I know my first ticket I'm going to book is to Vegas. So that was a big part of the report, which wasn't surprising. I'd say the part that was a bit surprising was of the data that we saw. So we do see income data, and we saw that a ton of consumers who had received the stimulus dollars spent a ton of money on travel, but they also spent a ton of money on home improvements. So Home Depot, restoration hardware, Wayfair. That was the part of it that was a bit surprising to us. With Cardify, we also have the ability to poll consumers through real-time surveys. And it's through that we saw that consumers also wanting to put their money into the market. And so through the data, we saw deposits into Robinhood, deposits into E-Trade. But when we asked the consumers what they were buying, a ton of interest in stocks, but also a ton of interest in crypto, especially the female consumer. A ton of more and more mainstream.
Stop right there. That was what jumped out at me. You tracked me getting a new couch, which we're still waiting for. The backlog is crazy.
Yeah.
Talk to us about the crypto, what you learned, because it's not only that women are buying crypto, but it's people they're doing it at a rate greater than people who didn't get a stimulus. What does that tell you?
So our data is Gen Z and millennial focused, and there's a ton of talk about this cohort of consumers leading us out of the recession. I think we've just become more open to risk. I think over the last couple of months, last year, millions of new consumers signing up to Robinhood, signing up to Charles Schwab. So that's already happened. And I think what's happening now is that, okay, all these consumers are FOMOing, and they saw how much their friends probably made over the last couple of months off of crypto and off of NFTs. And so we saw the data of the consumers that received the stimulus, 55% who received the stimulus, more likely to put money into crypto and just high risk investments. I also think what's driving that is we read the news, we pull up our Yahoo Finance, and we hear about inflation, and gold no longer being the way to hedge it, and crypto being the way to hedge it. And then you hear Tesla and all these mainstream companies accepting. I think it's a self-fulfilling prophecy that young people like myself, who've seen the last crisis coming out of this one, we want to take more risk.
Derrick, you mentioned there that within retail investing, at least, Robinhood is a clear winner. Any indication as to where else they're going if they're looking to invest in the stock market and they're not choosing Robinhood?
Yeah, Charles Schwab is another really popular one, platform that we see a lot of dollars going into. But I will say we actually saw a pullback in deposits into Robinhood. And I don't know if it has to do with the GameStop, AMC, Reddit fiasco that's happened, but definitely a pullback versus last year. Charles Schwab and a lot of these brokerages that have fractional shares, a lot of consumers that we track, younger and maybe not able to afford that, $600-700 Tesla share price, buying up fractional shares on platforms like Charles Schwab, but Robinhood still being super popular amongst the crowd, but definitely a bit less so versus a year ago.
I don't want to be disrespectful towards the crowd with Robinhood or GameStop, but when you point out that you have younger people using the money they got from the federal government to invest, we have much older people coming on this platform who say free money is making people make bad decisions. And it sounds like your data reinforces that.
There's definitely some risk taking. I can't comment on whether crypto will be a good or bad decision, of course. But I'd say that there's definitely a lot of risk taking. I think consumers just coming out of the last crisis, seeing the stock market just going up and up and up and up, and with the jobs report that came out last week, and with more and more Wall Street analysts just upping their prices on everything. I think there's a bit of this like buy everything risk-on mentality that especially this young consumer who have nothing to lose are coming to the table and making some of these big, bold investments.
Derrick Fung, thanks so much for having on here with us. Great to speak with you. Derrick Fung, CEO of Cardify.